Hello, everybody. Welcome back to Every Day is Saturday. I'm Matt Stahl, along with my partner, Brad Gatto. And
hello, everybody.
Hello. Today,
I had to change it up a little bit.
Yeah, I like it. Today, we're going to jump into a topic that we've never discussed before on this particular podcast. We've had a lot of questions come up with all the volatility about precious metals, and gold in particular tends to get the most attention.
Yes. The most questions you and I have had since 08, 09 for sure.
Right. Yes.
Yeah.
So we're going to address it today. We're going to go through, number one, some different sides of the coin when we look at gold or precious metals as an investment, and also wrap it up with some kind of guidelines that we'll go through.
A little history of kind of gold and the gold market, if you will.
Yeah.
And then, like you said, just kind of give some tips and tricks or some guidelines on, should I be invested in gold? Should I not? And what does that look like?
Yeah. Before I dig into that, want to share what you've been up to? Or do you want to share something else?
Well, in the last episode, I talked about how we had just gone on spring break. And so not a lot since then. Baseball's starting. But I will say this, because it ties in. If you listen to the last episode, you know that we actually spring braked. Is that a thing?
I think so.
I'm going with it.
Verb, yeah.
Spring broke?
No, spring break. Right, you said.
In the San Francisco area. And I grew up a 49ers fan of all teams. My dad was a 49ers fan. I grew up in Iowa, so you get to pick whoever you want. And they were really good in the 80s, if you're unfamiliar. But because of that, I've always been semi-infatuated with the 49ers as what they were named after, their namesake, the Gold Rush in 1949, 48, 49. And some of the facts. And of course, so now going into this whole podcast episode on gold, which is more centered around this idea of, should I be investing in gold? I'm far more interested in the history side of it than I am the actual investment side of it. And so we actually got to see, one of the things that we got to do while we were out there is visit Alcatraz, which we all know was a prison, but it was actually built to protect, originally in the 1800s, to protect our gold. Because when it was found out on a global scale that we discovered gold on the west coast of America, which at that point was brand new, right? It was just being settled. America wasn't nearly as established as it is today, let alone the state of California, being a part of the United States. And so we needed to protect, they thought they needed to protect what they were finding. And so it was a fort that was built around this idea of protecting their gold. And here we are 50, 60 years later, and people still look at gold that way.
Yeah.
In a lot of ways. So anyway, that's probably not at all what you were looking for. It's baseball, man. I'm waiting for the consistency of the sun so that baseball is actually outside and it feels like baseball season.
Right.
That's the actual answer to your question. How about you?
I do not have that shared experience of Alcatraz because I never visited. I did mine fool's gold down in Missouri growing up, though. So that's the closest real life experience I have to gold itself. But I think the history is really important. The history of anything. So to truly understand anything, I think first must understand the history before you try to understand the future.
Right. So, well, as an investment, like when you back up, obviously the United States is very young relative to even modern civilizations, going back to the ancient Roman empires and of course even before then. But gold has been around and been a part of these ancient empires for a very long time, but it didn't mean the same thing to them as it does to us.
Right.
It meant, well, I guess in some respects, but it definitely meant wealth, like power, majesty. Some people worshipped gold.
Mm-hmm. Some people still do.
Okay, fair. But it was more of a status symbol type thing.
Yeah.
Like the pharaohs, I think of as what comes to mind. And not only did they wear it and adorn themselves in gold, but they buried themselves with it and,
right.
That kind of deal. So gold has been sought after for a very, very long time, but a lot of it isn't even because of the usefulness of gold and the things that you can actually do with it as a commodity. No different than oil or beans. Right.
Yeah.
But it's just kind of the status symbol of it and the way that it looks.
Yeah. The intrinsic value. That's a term we used a lot for a long period of time. Yep. Talking about that. I'm also waiting for spring to come for soccer and then give that update. But all right. So let's jump into let's give some perspective, like the history of gold. You're a history buff. I understand history, not quite to your degree, but I'm also fascinated by it. So let's give some context before we jump into, does it make sense in 2023?
Yeah. And so I think it's fair to say by the end of this, and if you've listened to, I don't know what episode this is going to end up being, 50 something. If you've listened to all the episodes, you probably know we're going to end up here.
Yeah. Yes.
I don't think it's going to come as a surprise to you how we're going to end this episode, but I'll start by saying this. When, as young financial advisors in 2008 and 2009, context for the listeners, you got into this industry in 2005, which was what? You're in your 18th year?
Yeah.
Okay.
Isn't that crazy?
I got in 06, so that's my 17th. I'm in my 17th year. But you back up, you got in 05, I got in 06, and then actually the end of 07, things started to fall apart. And 08 was a really bad year, and that didn't come to a close until March of 2009. And so it was a 16-month drawdown of 53% in the S&P. And not only that, but the headlines were terrible.
Mm-hmm. Fear everywhere.
Yeah. When you've got large investment banks going under, you've got the government having to bail out massive insurance companies like AIG or large automakers like General Motors. It was a crazy time. We had clients at that point in time, Matt, that lost money in cash.
Right.
Cash that lost money. So I just remember those conversations. The reason I bring that up is because, as you can probably imagine, gold was a big conversation for people. They were coming to us and saying, hey, should we be buying gold? Should we be buying gold? I know people personally that went out not only and bought gold as an investment in like an ETF, like literally physically bought gold, went and bought gold bullion. And so in modern investing times, it's kind of had this reputation of when I'm fearful and it looks like the world's going to hell in a handbasket, I should be buying gold.
Yeah.
But the message we tried to deliver then.
Right. My response often to that was, and to be fair, I would say that we probably both shared a bias.
Sure.
Against at least, I would say past tense, we shared a bias against gold in general because of the fear element of it. And the one phrase that I would often return with was, that's telling me that everything is going to hell in a handbasket and everything's going to fail. And if that's the case, you should probably own some guns and know how to garden.
Yeah.
And have some good relationships with your neighbors.
Right.
As opposed to holding on to a piece of precious metal.
Yeah. Because, our modern society doesn't worship gold the way some ancient cultures did. It definitely doesn't hold the same wealth and power and majesty. And it doesn't, not that it doesn't have any of that, right? People still buying gold rings for people that they love or buying their own jewelry or whatever. But it definitely doesn't have the same kind of aura that it used to from that perspective. And so if things are really going to get that bad to the point where, your stocks are going to zero and you're left holding physical gold, what are you going to do with it?
Right.
So kind of what we told people back then was the 4 asset classes that you should own if you really think it's going to get that bad are goats and beans and guns and ammunition.
Yeah.
Because that actually has some intrinsic value when...
Bow and arrow, maybe.
Yeah. That's a little old. You go with your bow and arrow. I'm going to stick to my...
Oh, that's a renewable resource. The ammo might run out.
You can make ammo.
So you have to have the raw materials to do it though, right?
Well, you got to have the raw materials to make an arrow.
That's true, but they're more accessible.
This is not where this podcast was supposed to go. Anyway, gold as an investment. It's got a history in this country. It's got a really big history, especially with the expansion out west. But in that gold rush, even then, when people were actually mining for it, like in anybody, like the way that if you go back and read how people were like staking claim to land and like how you got access to land and how the people that like traveled out west actually found places to mine for gold. It's absolutely nuts.
It's bonkers.
But most people failed.
Yeah. Vast majority.
The vast majority of people that went out there to find gold did not find it. And even a lot of the people that did find gold didn't find enough of it to have kind of a life-changing event or to strike it rich as they were all hoping to do. But what's interesting is there were a lot of people that went west that found no gold and still did really, really well.
Right. We were just brushing up on some more history in to give some context on this. And one of the folks that actually made a lot of money was a gentleman named Sam Brennan that decided to buy up all the shovels and picks in the area. And
smart guy.
He's actually credited with starting the gold rush.
Yep.
And it was from him going out in front of his storefront and yelling gold and creating some hype. And
he had his own gold. He had his own bag of gold that he had one bag, and then he made it look like he had struck it rich.
Yeah.
Gold wise.
Which is crazy that one act,
yep,
created this whole waterfall of events after that.
Then he monopolized the tools that people need to mine for gold and charged ridiculous rates for them and struck it rich.
Yeah, created a supply and demand issue.
Have you ever heard of Levi Strauss?
No, never. Yeah.
Another guy that did really, really well, and it wasn't necessarily because of the gold. In fact, don't quote me on this. If you're a history person and you know the story, I could be getting this wrong because it was a long time ago that I read all this, but I believe Levi Strauss's family did have gold, but I believe they lost it. I think, yeah, because they used to have to, when they shipped it back east, because they wanted to get it back to the East Coast, because that was, the West was not settled necessarily yet, right? And so they needed to get it back east. They had to put on a ship and go all the way around South America to get it back to the East Coast. That was the most quote unquote convenient way to do it. There was no Panama Canal back then. And there was a ship, I don't remember the name of the ship, that sunk off the East Coast in a hurricane, like full of gold. And I believe Levi Strauss's family money was on that ship, but then he invented jeans, which happened to be really good for mining gold because you were getting dirty in on your knees and all these things, and a much better pant for these people.
They had rivets.
Rivets,
that was the big thing, the rivets in the pockets.
Yep.
Which brings up another point that you just mentioned. And this is also a quote that you may have heard from one of our mouths in the past if we'd had this conversation, was talking about the Transcontinental Railroad. So the railroad that actually connected the East to the West in the United States. And the symbolism of
wasn't it in Omaha where it finished or somewhere around there?
I do not know. I just looked it up too. I don't know the exact location.
Oh.
We should find that out though.
I'm going to go with Omaha. Final answer.
That sounds good.
I'm probably
Warren
wrong.
Buffett's there, right? So, but the symbolism of the last spike that was driven to complete the Transcontinental Railroad and link up the East and the West was made of what?
Well, I know the answer.
Yeah.
Gold.
Yeah. There was supposed to be a dramatic.
Dun, dun, dun.
There we go. So conversation we had often was there was a small fraction of people that actually found gold.
Yep.
Again, and found enough for it to make any difference whatsoever. Right. So this hype was created, and those that actually became really wealthy were two different things. Those that invested in the technology of the railroad itself. So it's kind of funny to think about a railroad as a technology now, but that's the definition of it.
Yep.
Something new that created more opportunity. So those that invested in that technology and also that was bringing value to others, those are the folks that actually found wealth during that time frame.
Yep.
Were those that were creating services and value for all the migration of people going that direction. So
yeah, so there's quite a history, and a lot of the price of gold has been driven not just by the quote unquote necessitative need for it, but the desire to have it.
Yeah.
And I think the further we go, the less people desire just to have it as a physical asset because of wealth, power, or those other reasons. Now it's bought from an investor's standpoint, primarily as a hedge to the stock market.
Yeah. Yep. So I feel like up to this point, we've kind of showed one side of the coin. Yeah. Perhaps it's time that we
the history side.
We flip over the other.
Is it a good investment, Matt? Should people be buying gold?
That's a great question. We are going to sum this up in a handful of different points. One thing I do want to share is historically, my response probably would have been along the lines of some of the things we just shared.
Yep.
And however, it turns out as you get older, if you're lucky, you gain this thing called wisdom. Some of it at least, right? But in wisdom is, as I get older, I can appreciate more and more the appeal of having something. We live in this world where our wealth is a number on a screen.
Yep.
Right? We don't hold on to stuff. Everything is computerized. So I can see some appeal of something solid and owning something real. Right. And so it's become, at least personally, easier for me to appreciate those that have an affinity for something like that.
Or like real estate or
right.
farmland or whatever.
Exactly. So as we present it, as we look at it now, one of the best statements I think that we discovered is it's something to be traded, not to be thought of as an investment.
It's a commodity.
Yeah.
Right. And again, we've given some examples of other commodities, whether it's oil or it's beans or there's hundreds and hundreds of commodities that you can purchase, but commodities are typically for trading, not for longer term investing, is kind of a philosophy that we use internally here. And it doesn't mean that you shouldn't have any of your portfolio in gold. So let's just start with that. It doesn't mean you shouldn't own gold. If you're going to own it, we look at it as kind of a diversifier like we do any other slice of the portfolio. And you can cherry pick dates, Matt. You can go back, again, over the last 100+ years of kind of our modern markets. And I could cherry pick dates where gold beats stocks. And I could cherry pick dates where stocks beat gold. As an example, if you look from 1990 to 2020, that 30-year period, gold was up about 360%. Not bad. The Dow Jones was up 991%. But if you slice that down a little further and you cut out, you don't go from 1990 to 2020, but you go from 2005 to 2020. Now gold did 330%, almost the same. The Dow's only up 153. But if you can pick different points in time where gold wins and different points in time where stocks win. Historically, though, with all the data that we have over the last 150, 170 years, stocks beat gold about 3-1. From a return perspective. So on a pure return basis, if you're playing the long game, stocks are going to win. But people aren't asking us right now if they should be buying gold because they're thinking about long-term stock returns. They're asking the question because they're fearful of what short-term stock returns are going to look like. And so should I go to gold instead? And in times like this, is gold a good investment? And on that note, couple of things. One, gold does tend to be used as a crisis hedge, right? When crisis hits, I'm going to go to gold. And that can work. It's worked in the past if you got in at the right time and got out at the right time.
Right. Yes.
Which I'm saying a lot there.
Yeah.
Right. Because getting in and getting out at the right time is really hard to do. Gold over the last couple of years, as an example, has spiked in price and hit its all-time highs right at the height of COVID. It went over $2,000 an ounce, and then it did it again recently here in 2023. It kind of matched that all-time high or got close to it. But a lot of what drives that isn't just the fear piece of it, because it's not the price or an ounce of gold isn't moving around a ton by how much we're using it, right? There's nothing to do with that. It has to do with how much of it's being either saved or disposed of. And so kind of the accessibility of it. Are people hoarding it or is it moving around the markets and the availability of it moving around the markets? Because at the end of the day, there isn't millions of tons of gold in the world. Right? There's only so much of it. And so a lot of it isn't being used for day to day the stuff that's being invested in isn't being used day to day for jewelry, right? It exists. It's physical gold that exists. And so it's how much is it being hoarded or putting back into the markets, which is kind of a supply and demand, right? It's kind of like the velocity of money and how, the Fed likes to put money into the system to ease money, the whole quantitative easing thing that we had after 08, 09, and again here recently, versus them taking supply out of the system. It's going to affect price, but there's no central reserve doing that. With gold, it's you and I and other lay investors and funds that are invested in gold choosing, do we want to hold on to it or do we want to dispose of it? And that's really what's going to drive a lot of the price of gold. Also important to note that it is going to be solely driven by price appreciation and nothing else.
Right. Right. So my name is Matt. I am a 68-year-old I just retired last year. I have a $2 million portfolio and I'm freaking out right now. And I've been reading up and I've come across several articles that have gone through the history of how gold was a great hedge.
Yep.
Brad, I want to move half of my money into gold right now. What do I do?
Oof. Well, the short answer is don't do that. You should never move half of your money into anything.
Okay.
Because half your money is in one thing now. And you're really relying on that one thing to drive success or failure for you. And if you didn't listen to the last episode, we just got done recording, you should probably go back and listen to that episode because we discussed kind of the tails. And inside of gold, there's also tails where it's done really, really well. But you shouldn't have half of your money in anything. Number one. Number two, if you want to own gold, that's fine. You can use it as part of your portfolio like anything else. So maybe 5%, not 50, could make some sense as a diversifier. But I definitely don't think that half of your money should be in anything, no matter what it is. Take out gold and put in anything else. I don't think that that makes sense. But it does tend to be a non-correlated asset. That's not always true. Sometimes when the market goes down, gold also goes down. But more often than not, it can be a small hedge inside of a portfolio.
Okay. That's reasonable.
That's reasonable?
That's reasonable. I can live with that.
And it's tough to say, like, what's the right time to get in? And as with any other asset, right? Because gold, as we talked about before, is going to be driven by this kind of crisis hedge. And the question is the crisis already baked into the cost of gold today? You could make the argument that, yeah, absolutely it is, because we're bumping up against all-time highs. You could make the argument it's going to go even higher. But that the timing of people's fear is going to drive a lot of that price. But then if you just look at the price of gold relative to what it is, and let's just say it's not gold, it's oil. And we're looking at oil now and we're as another commodity. And we're trying to decide, is it a good time to get into oil? A lot of what's going to drive the price of oil is supply and demand, but also the costs of getting to that oil, right? How much does it cost to get the oil out of the ground and to refine it so that it can go into my car or into my home or into the other applications that we use oil for? And the cost of mining an ounce of gold versus relative to the actual price per ounce, people mining gold are making a lot of money. There's a massive, like when oil prices go down, to go back to oil, like there are definitely times where oil production slows because certain ways that, like, take fracking as an example, much more expensive to frack, the cost associated with getting that. We live in Minnesota. I'm thinking about the Bakken oil shale up in North Dakota where they kind of struck it. When was that? Like, was that like
early
2010, whatever it was. Yeah. But it's really expensive for them to get a barrel of oil out of the ground up there relative to some of the well-defined, been around a long time rigs down in the Gulf, as an example. And so when the price of oil drops below a certain dollar a barrel, it can still financially make sense to be getting oil out of the Gulf, whereas they got to shut down the Bakken shale up in North Dakota because it's just too expensive. Right. And so that can have a lot of the bearing on price as well. But gold's the same thing. And when you look at the cost of mining an ounce of gold, the last kind of research I did on it was about $400 an ounce is what it's costing them to get it out of the earth and mine it. And given the fact that it's going for $2,000 an ounce, the people that are mining the gold are crushing it.
Right. So maybe I should invest in that company as well.
Right. But that also tends to not last very long.
Yeah.
Right. In seasons where, like, these oil companies have these big fat margins, those come and go. Because there's also times where they don't have any margin. In fact, it's costing them more to get a dollar of oil out of the ground or a barrel of oil out of the ground they're able to sell it for. So another thing just to be cognizant of, and right now, if you just look at it from that pure perspective, you take the crisis management or crisis asset out of it, it's expensive.
Yeah.
Just relative to the cost to get it out of the ground and what you're actually going to have to pay for an ounce. So those are the two things we kind of pay attention to.
Yeah.
Is are we in a crisis and have we priced the crisis in, and then cost of getting it out of the ground? If you want to look at it from a pure tactical perspective, those are the things to kind of pay attention to. But generally speaking, nobody should rush to gold and overweight gold, just like they shouldn't do that to cash or any other safe asset.
Or cryptocurrency.
Or cryptos. Last year's a great example for both of those things. People ran to the safest asset out there, government bonds, and they got obliterated. One of the worst performing asset classes, and it's the safest asset class last year. And cryptos were down, 70% last year?
That's a big number.
As with anything, it can be a good long-term hedge, but at best, a small piece or slice of anybody's portfolio.
Okay. That makes sense.
That was a long diatribe on. That was really boring.
I thought it was interesting.
Okay, good.
There's some history in there. There's some context. You probably, if you've known us for a while, you know where we're going to land. Also, a good example of some people just have things that are really important to them, and we will acknowledge that.
Yeah,
but it has to fit in the overall context of the big picture plan as well. So,
and I would bet some of you that are listening to this own gold, and you don't even know you do.
Right? Yeah, within a fund somewhere.
Yeah.
For sure. Yeah.
You probably have some of it already.
Or maybe you own gold and you just didn't tell us.
Right. I guess the last point I want to make here is because you mentioned precious metals at the beginning, but now we've been honing specifically in on gold.
Yeah.
Some of the other popular ones are silver and copper and things like that, but also commodities. But even silver, we talked a lot about silver in 08, 09 when we were kind of trying to walk our clients through that crisis. Silver, on a pure intrinsic basis, has far more application in our society than does gold, relative to what it's used for, right? And so if you're just looking at it from the perspective of what can I do with this commodity, outside of just try to sell it to somebody else, how can I apply it and use it in a meaningful way? Silver has a ton of practical application. So from a diversification perspective, trying to minimize volatility of the commodity that you're buying, definitely more uses for silver than gold.
Yeah. Makes sense. I do want to mention one thing. This is not specific financial advice for anybody listening. Reach out to your advisor to discuss that further.
Isn't that a disclaimer at the end of every one of our podcasts?
I don't think so. Not that particular, I don't think.
This is never specific financial advice. Don't go out and buy 5%. That was just a number. Or less, or zero. We don't typically run to gold. We don't typically, like in a non-crisis environment, recommend portfolios that are proactively buying gold.
Right. It goes back to that bias again. Neither of us are very fear-based. The name fiat is to have faith.
Right. Well, and I don't understand how you get into the markets if you are fear-based.
Right.
That means the only reason you got in is because of short-term greed, in my opinion. And that usually is going to bite you. That can't be where we end it. Let's end it on something positive.
Right. So to sum up, the right strategy is always to invest in something that's going to provide value to others and make the world a better place.
Yeah. And if it's one of those things where you have the opposite bias and you actually just love gold, that doesn't mean you shouldn't own any of it. Right. We just need to make sure that it fits in the overall plan and that it makes sense with the rest of the assets that you hold and all those sorts of things. So all that said, it is a bit of a fearful time, and we just wanted to acknowledge that that's real, and fear is a real thing. The last episode that we just recorded before this and this episode, if you play them in tandem, I think that's going to do you a lot of good, because in the previous episode that was released a couple of weeks ago, we kind of went through some of these tales, kind of the extreme ends of the markets and where it really, really wins and where it really, really loses, and how to kind of try to navigate your way through that behaviorally, emotionally, and things like that. So all that being said, there's always a lot of information that comes out about gold during times like this, but you also have to understand that those are the people that are trying to garner your attention and get an investment from you and use your fear to make money for themselves. Right. So with that said, thanks for listening to another episode of Every Day is Saturday. My name is Brad Gatto. This is Matt Stahl. As a reminder, if you've not yet subscribed to the podcast, you can do that. And if you've heard me say that 15, 20 times and you still haven't done it, I don't know what you're waiting for. If you want to share it, please share it. We're on every platform that you could possibly listen to a podcast. You can find us. Every Day is Saturday. We'd love to have you back. Until then, enjoy your Saturday. See you, everybody.
Thank you for listening to Every Day is Saturday. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Fiat Wealth Management. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.